Well, thank you, thank you. Thanks for the very nice introduction, and thanks for the invitation to be here. I'm always happy to talk to traders and to share some of the methods that I have learned in my. I like to think it's long, but it really has only been about 12 or 13 years that I've been trading. But I've seen a lot of crazy and fantastic and wonderful and exciting things in that process, and I love to talk about it. And I love to work with new traders. That's what I do on a fairly daily basis. I've got a trading group. We all get together, we brainstorm, we look for some fantastic trades together, and we just kind of rinse and repeat, do it over and over and over again, and it's a wonderful process. So again, thanks for having me. You gave me a great introduction. I have spent my entire trading career uh, dabbling in a little bit of markets, but most of my focus has been on Forex and currencies, and I just love currency trading. I think it's one of the best markets you can be in. There's so much movement, there's so much activity, and it's so interesting as well. It's a great way to keep an eye on global markets and what governments are doing, and just an overall great outlook for the big economy. So the big picture, I love it. Okay, so we're going to talk about high probability breakout trading today. Let me look at it, or let me show you a couple of things real quick here. First of all, that is my mug, if you will. Here's I think it's still coming up on the screen. There we go. This is a picture of me sitting in front of my computer, which is something I do many hours a day, and I love every second of it. I don't know, does anyone else here have withdrawals like Friday, Saturday, Sunday? By the time Monday rolls around, you're kind of itching to get back to the charts. If I'm the only one that feels that, then I probably should see a doctor. There might be some medication for me, but I love trading and I love being in front of my charts, and I enjoy it every day. It's been an awesome experience as well. I've been a full-time trader for this entire time, and it's given me an awesome opportunity to kind of live around the world. I've lived in a bunch of different countries. I've dragged my wife to all kinds of crazy places, and it's just been a really great experience. So there's really nothing like being a full-time trader. It gives opportunities that many of us wouldn't have otherwise. So I've loved every second of it. Here's a couple of important links to keep in mind. I don't know how many of you guys use Twitter, but it's a great way to communicate with a lot of other traders out there, and just kind of be part of a bigger global community of people doing the same thing. And so I'd love to have you guys interact with me on Twitter. I'm there at DayTradersFX. You can also visit my website, daytradersfx.com. You can send me an email at jared@daytradersfx.com. All of those are great ways to get in touch with me, and hopefully you'll have some questions and some comments after this presentation, and even after today and going into next week and in the coming weeks as you start to look for some of the trading methods and some of the things that we're going to talk about today. Okay. This is going to be an important link. I shared this with Yana, and I think it'll be posted in a moment here. This is a great little thing that I'm going to share with you guys for free, and it is wonderful. So when you get a chance, and by get a chance I mean ASAP, this is a digital copy of a little indicator that I use on my charts, and there's limited availability because I think the internet might run out of them. So go get yours as soon as possible. This is a little indicator that I use. As mentioned earlier, I don't like anything too tricky or too crazy. I just like looking at the basics. And this indicator is something that we can all do manually. It just helps things get easier, so we don't have to spend so much time doing what this indicator can do, and will show us. And I'm going to talk about what all that is in just a moment. But again, for all of you Forex traders out there, get this indicator as soon as possible. And I hope you love what we're about to talk about and how this works. So here is how here's how my approach goes. I use the triple threat approach to trading breakouts. And I say triple threat because that sounds kind of scary and kind of crazy. And for those of us that sit in front of our computer every day, we need that feel that we're still alive. So the triple threat approach is what I use. And I just use some basic things on the charts. Pivot points. Hopefully you guys are familiar with pivot points. Excuse me. We're going to talk about those and show a few examples of how those work and some of what goes on there. I love chart patterns. Chart patterns are absolutely just amazing. And we're going to talk about how those all come together. And then again, this indicator, which is just my own development. And again, it's not anything tricky or crazy. It just saves me time, which is why I developed this indicator. Because I was doing it manually. It's just a couple of things we look at on the charts. We get a couple of numbers, and it helps us really identify what the markets can potentially be up to. So without further ado, let's jump right into it. For good breakouts, now, of course, we're going to have some questions in the end here, but just think about this. For those of you that have been trading, and whatever you trade, whether you trade stocks or any of the indices or commodities, currencies, anything like that, if you have just tried to trade breakouts, it's probably been difficult. And in fact, I would bet that a few of you in here, if not several of you in here, would say that breakout trading is a disaster and that you can't do it successfully. And I would agree with you. Breakout trading is crazy difficult when it's done on its own, when we just look at breakouts and we just trade every time the market crosses a trend line or a support or resistance level or whatever. That gets pretty difficult. And so we need, that's again where kind of that triple threat approach comes from. Chart patterns, pivot points, and then this little indicator that I'm going to talk a little bit more about. So a good breakout, one of the reasons, and there are many, but one of the reasons that breakouts by themselves fail, or that we fail at trading breakouts, or whatever the case may be, is because we can't just take every breakout that happens. Trend lines form every second of every day, because really all a trend line is connecting 2 or maybe 3 points, and that's it. And there you go, you have a trend line. Does that mean that's a good area to get in because the market crosses that trend line? Maybe, maybe not. And that maybe not is kind of a big question mark. And that's where a lot of people get stuck in just kind of trying to trade every time the market crosses some level, some line, something. And so we need to have a bit of reference. We need a point of reference here so that, number one, we can find overextended markets. I love trading breakouts on overextended markets. We can trade some nice corrections, trade some reversals, get that nice pullback. But trading corrections is very tricky as well, because oftentimes we're trying to get into, maybe we're trying to short a market that's rising because, again, a trend line breaks. And just because a trend line breaks doesn't mean we need to be in the market. So we need a point of reference. We're going to talk about what that is in a moment. So with a good breakout, overextended markets are helpful to trade those reversals, and a strong trend is very helpful to trade continuations or trade in the direction of the trend. The trend is always our friend, and we want to work with that. So we're going to talk about how we can successfully trade breakouts in the direction of reversals, as well as in the direction of the trend of the market. Okay. So first and foremost, my main chart patterns that I use are these ones right here that you can see. I love trading breakouts with these chart patterns: head and shoulders patterns, rising and falling wedges, bull and bear flags, double tops, double bottoms. Now there's about 97,000 other chart patterns that we can look at and trade, and some of them have some amazing names that sound more like constellations in the sky than something you would find on your chart. And so I just kind of have focused my energy into keeping it a little more simple. These 4 patterns tend to give me all the setups I need and then some. There's no shortage when you look at these couple of chart patterns. And again, these patterns will work. These will be great for anything you're trading: stocks, commodities, anything. Again, I happen to focus more on Forex and currencies. So I love using these on those currency charts. Okay, so the other thing that we use are pivot points. We use pivot points. I have a pivot point, again, a special pivot point indicator that just kind of keeps, makes it a little easier to watch daily, weekly, monthly pivot points and all of that. So again, pivot points are used very, very nicely in conjunction with chart patterns. I use pivot points for a couple of things. I don't know if you guys have heard of this or been exposed to missed pivots. Does anybody know what missed pivots, what I refer to on a missed pivot? Obviously a pivot that's been missed, but what does that mean? Well, a missed pivot point is where that pivot point just has not been hit during the time it was created. So I love daily pivot points, weekly pivot points, monthly pivot points, and those are considered missed. You know, for example, if a daily pivot point is created and during that day the market does not hit that pivot point, that's now a missed pivot point. Or a weekly, during that week it doesn't hit that pivot point, that's a missed weekly pivot point. And you know, obviously, just looking for those missed levels is great, but currencies in particular are very good at coming back to missed pivots. And I'm going to show some charts. I've got so many explanations and charts and examples. I will definitely go over those. But these missed pivots make for excellent targets. They kind of have this gravitational pull on the market. And again, I'll show these examples in just a moment here, but they make for really good targets. If the market is falling, for example, and it's missing these pivot points because it's dropping too quickly and it's got pivot points that are stacking up overhead, you know, up above, we know that a long position is coming very soon, but we need some more things to before we get into that. Just trading towards missed pivot points will once again result in disaster, just like just trading breakouts will be a disaster. So we have to have a couple of these things lined up. So let's look at some examples. I love using screenshots. We're probably going to go to my charts a couple of times because I love just going right to the charts and showing current examples. And we've got some great current examples that we're going to talk about. Okay, here is just a quick little example. This is the Aussie dollar. This is a big head and shoulders pattern on the Aussie dollar on the daily chart. Now, we have two things on here, again, that we're looking at. Number one, we have a price pattern. So here's a nice head and shoulders pattern. Shoulder, shoulder, head, everything's looking great. Breaks the neckline, makes a huge move down. Everything's wonderful. I made a good chunk of change trading this head and shoulders breakout. It was just wonderful and fantastic. But what's more is that this move down, this head and shoulders pattern, was in the process of forming and making its move. And I don't know how many of you have tried to enter long-term breakouts like these, like on daily charts, you know, something that we could potentially stay in for a couple of weeks or a month. We try to trade these breakouts, and it seems like you get in and the market pulls back 100 pips without even thinking about it. You get stopped out, and you're thinking, good grief. And then, you know, you get discouraged. Maybe that's the biggest loss you ever had, and you walk away. And then you look a couple of days later, and that big neckline level broke, and the market's just running like crazy in the direction that you were trying to trade it in the first place. Again, I don't know if that's happened. It has happened to me a couple of times. So we can get a lot of confidence by adding these missed pivot points in here. So just take, for example, here's our nice little run up. We create that shoulder, we create that head. We actually end up with a nice little rising wedge right there. We're going to look at a few of those examples. But in the process of this Australian dollar, US dollar moving up so quickly, you see these little lines right here. This is on a daily chart. So these little green lines are weekly pivot points. These are weekly pivot points. You can see them all along the way there. Those are our weekly pivot points. This, I don't know, I might be colorblind here. This maroon-ish line, I guess, that is a monthly pivot point. So there's a monthly pivot point. And then on the daily chart, it's not so easy to see daily pivot points because we're looking at kind of a larger time frame here. And those little daily pivot points don't show up so well. And we're going to look at those on some smaller time frames. But as this continued to run up, you can see that during this week right here, this pivot point was not touched. And away the market goes. It just runs right on up. Again, this is a daily, a look at a daily chart. So we're looking at several months worth of movement right here. And so that's 1 week, and that's 1 week, and so on. So this moved up, didn't touch that pivot point, and just kind of continued working its way up. Well, lo and behold, it starts to form this head and shoulders pattern and starts working its way back down and heads to this neckline. Well, in the process, you can see that during the month of October there, that left a missed monthly pivot point. So now we have a missed weekly and a missed monthly pivot point. And you can't, once again, you can't see it so easily on this chart because it's a larger time frame, but we had some missed daily pivot points as well. So some pivots that weren't touched during the day that they were created. So we have all these pivot points that are down here. And again, they're kind of like these gravitational pulls on the market. So what we look at is as this is running up, as this is creating our price pattern and works its way down, we can start looking for those breakouts with a lot of confidence because we know that we have these missed levels that the market wants to get back to. I don't know how many of you guys trade gaps. Does anyone trade gaps where, from the open to the close of the market, it moves and leaves those empty spaces, and particularly in currencies, markets love, love, love to fill those gaps as soon as possible. And sometimes gaps can last for days or weeks or even months. But it seems like the market always gets back to those gaps and trading those gaps. And so pivot points are the same way. When the market misses those pivots during the time they were created, it's almost like there's this urgency to get back to those missed pivots. And so again, that kind of helps we're now looking at kind of two of the three legs here. We're looking at price patterns and we're looking at missed pivot points. Those are so helpful in helping us find, again, these high probability breakouts, these trades that are going to hopefully make us a chunk of change, as we say. And so here's a little example of that. So a quick explanation on the missed pivots and a price pattern there. Let's look at another example. Here's another price pattern. I don't have the pivot points on this one, but this had some fantastic missed pivots. I have it on some of the next ones here. This had some great missed pivots in here, but this is just a nice little rising wedge. This thing just kind of kept going up, and I just wanted to make sure to show a few of these price patterns because I know some of you are maybe not as comfortable with price patterns as others or chart patterns, and so I just want to make sure that we don't assume anything here. So if you are super familiar with head and shoulders and rising and falling wedges, this will just be a nice little review. But for those that are seeing this for the first time, feel free to kind of write some questions down, save them, and ask them in the end so that we can make sure that everyone's getting this. But here's just a nice little rising wedge. This is a reversal pattern, as you can see. We've got some trend line support, right line resistance, and you can see that it's narrowing as it goes up. And then it makes that nice breakout and a nice big move down. I love rising and falling wedges. They're some of the best price patterns that we can trade. They're just so excellent. So there's a rising wedge. Here's a falling wedge on the Aussie dollar right here. This just ran down, tapped those trend line levels a couple of times, and then made a nice breakout. Again, that channel is narrowing, which is why we call it the wedge. It's kind of narrowing and making its way into a tighter and tighter space. And so that is, once again, a nice reversal pattern, and away we go, and we make some nice little moves up on this. So great little price pattern on that. Here's another one that we look for on a very regular basis. Here's a nice little textbook double top here, and I traded this thing like crazy, and it was a great entry opportunity. Again, a double top is when we just hit the same level twice. Sometimes it's to the pip, sometimes it's give or take a couple of pips, like this one right here. One thing I just want to clarify, this is a question that I get a lot from traders in my group and people that I work with. That is, how do we enter double? What makes a double top, or what confirms a double top? How do we manage that? So what we want to see on double tops and double bottoms is, obviously we have to have a level that's created first. So this is now a point of interest right here. The market comes back to it. Nice bullish strong candle, runs right up to that same level, is unable, it pushes above a little bit, but it's definitely unable to close above that level. So it closes below that. The next thing that we want to see is we want to see the next candle be bearish in the case of a double top, or bullish in the case of a double bottom. So in this case right here, we want to make sure that this candle is bearish, and then it closes bearish. And then ultimately from there, we can look for entries as close to that high as possible with stops above that high. But this candle right here confirms that this is at least a viable double top. And now you can see it made some very nice moves on down there. So again, this is just a little bit of a review for everyone on how these double tops and double bottoms work. Just to make sure that we're not assuming anything, because these are going to come in very, very handy as we continue talking about how the whole system works. So here's a pound dollar, nice little double bottom right here. Same exact thing. We hit this level. The next couple of candles are bullish and make a nice little run up. Everything looks great. On these, you can see a little more clearly some of these missed pivot levels as this made that double bottom right here. We had some missed pivots. We had one missed weekly pivot right there. You can see a little daily pivot in there as well, and a couple of daily pivots actually. There's another one right there. So a few missed daily pivots, a missed weekly pivot. We have a nice little double bottom, and away this thing goes. It just trades right back up. You can also see that we have a little bit of a falling wedge in there, so that worked out pretty nicely. The double bottom was the confirming factor, and then it just ran up like crazy and went totally nuts. So nice little double bottom there, nice missed pivots, everything's looking great. So some of you may be thinking, okay, familiar with this is great. Here's where things are going to get a little interesting. Chart patterns are great, missed pivots are great, and it's so easy to look at those setups and say, all right, anybody can find a bunch of setups in the past and find the ones that worked and forget about the ones that didn't work. And we can just make a whole trading system on picking perfect things in the past that we may not actually be able to repeat in real time. So chart patterns and pivot points, again, they can be a little confusing on their own, and that's why we need a reference point. We need something that can get really, that can give us a few more numbers. A lot of you will probably have had some experience or are currently using some oscillating indicators, right? I would guess that some of you use MACD or RSI or stochastics. Or anything else. There's quite a few of them out there. And they're all very common, and a lot of people have used them for a long time and had great success with them. I have used all of those indicators. I kind of went through the experimenting with everything as I kind of honed in my niche in trading, and I just felt like those oscillating indicators told me what I could already see. And that wasn't good enough for me. I needed something else. I needed something to kind of give me a little bit more of an edge on the market. So that is where I came up with this indicator. Now, again, I don't want to have anything tricky or weird or crazy. I just want to have something that has some probabilities, that has some numbers. So that indicator, that link that you guys can see in the orange announcement box there, once again, download that ASAP because what we're going to talk about is it's something you're going to want to have in your trading arsenal for sure. What I look for in this indicator is I started to notice that by the way, as you can probably see on some of my charts here, this little reddish orange line coming through here. I think the screen's still catching up. This is a 200 exponential moving average. 200 exponential. I'll just type that in there for you. 200 EMA. That is what I use, and I use it on all my charts, all my time frames, and it's so fantastic. And I started to notice that the 200 EMA, there were some interesting occurrences there. And I noticed that the market would go a little ways and pull away from that 200 EMA, and then it would come back and touch the 200 EMA, and sometimes it would bounce off it, and sometimes it would go through it. And I thought, and first of all, this happens on any indicator, or excuse me, on any moving average. You could have a 100 EMA, you could have a 500 EMA, you could have a 50, you could have a 5, and a lot of people use a lot of various ones. My trading method is based on the 200 EMA and in the movement that the market has with that, and that's what this indicator looks at that we're going to talk about. I wanted to have some what's a good term? I wanted to have some readable, understandable numbers when it came to trading. You know, we look at MACD and RSI and some of those, and we see, okay, if it's above 70, if it's below 30, below 20, we're just, we're looking at those numbers, and that's great. But those are kind of fixed numbers that just are there, and the line crosses it sometimes, and sometimes it doesn't. And I wanted something that kind of gave me a little bit more, just a little bit more background. So what this indicator does is when you load it onto your charts, it automatically reads a bunch of history, and it looks for the number of candlesticks that have not touched the 200 moving average. So again, the market's above the 200 moving average, it's below the 200 moving average, it's all over the place. And so this will look at how often the market is touching the 200 moving average. And in fact, I wrote a bunch of programs that went back and just counted 10 years of past movements. How often does the pound dollar on the 1 hour chart hit the 200 moving average? How often does the pound dollar on the 4 hour chart hit the 200 moving average? On the daily chart, on the 15-minute chart? And I got a bunch of numbers and I started compiling them and averaging them out and kind of building a little bit of a trading system around that. And it has been surprisingly powerful. Not even surprisingly, they're just raw numbers, and it has been very, very powerful in helping me identify when markets are kind of reaching that overbought or when they're reaching that oversold kind of situation. So I ended up with a couple of numbers. Number one, how often does the market touch, or are the candlesticks touching the 200 moving average? And I average those numbers out. So remember, sometimes the market will go 50 candles on the 1 hour chart without touching the 200 moving average, and sometimes it'll go 350. And so when I take hundreds of those occurrences and I average them together, it gives me this number, right? 150, let's say. On average, the pound dollar on the 1 hour chart hits the 200 moving average every 150 candles. Well, that will be surprisingly ineffective by itself. We'll look at that and we'll say, okay, on average, but is this going to be one of those average times, or is this not going to be one of those average times? And so that kind of was falling apart. So I figured I needed some more information. So I took these average numbers, how often the market's hitting the 200 moving average, and I found that average candle. So for example, let me show you on my chart for just a moment here. For example, this is what we have right here. You can see this is the Aussie yen, and you can see all these numbers right up here. Hopefully you guys can see that okay. Here is the 200 moving average. Here's some pivot points that we've talked about. And what I wanted to know is, number one, what is that average number? So that is what is demonstrated in the top level of this of the indicator. EMA averages. This means that on average, on the 1 hour chart, and this will change for every time frame and for every currency pair, and it's displayed up in the upper right-hand corner on every currency pair, on most currency pairs. It doesn't work on all of them. Some of the really random ones we haven't really set it up on and done some of the back testing. But you can see right here, on average, every 134 candlesticks, right here, every 134 bars, the Aussie yen is hitting the 200 moving average. And again, that means sometimes it's only 50 bars and sometimes it's 350. And this is that average number. Currently, as you can see, we're 377 candlesticks or 377 bars since the last time the market touched the 200 moving average. So we've broken that average number in half and we're just heading right on up. So the next step I took to kind of try to add a little bit more confirmation, a little more surety to what I was doing, is I looked at that average number. So again, on this Aussie yen, for example, our average number of candlesticks is 124 bars. 124 bars from touch to touch. That's average. Well, the next thing I wanted to know is, once we reach that 134, I think I said 124. Once we reach that 134th bar, on average, how many pips then was the market moving away from the 200 moving average after that average candlestick? And you can, that is 174. So once the Aussie yen on the 1 hour chart has not touched the 200 moving average, the 200 EMA for 134 bars, then the average number of pips that it continued on without touching that 200 EMA is 174, basically 175 pips. That's the average number. The maximum number that we've seen thus far in the years and years of testing is 885. So once it reaches that 134th bar, it has in the past gone as high as 885 pips further without touching the 200 moving average. So now I kind of put these two things together. I said, okay, we need some pip numbers and we need some candlestick numbers. So what we have right here on the indicator is exactly that. Currently, we're 377 bars since the last touch of the 200 EMA, and currently we're 474 pips beyond that 134th bar since the last time it touched the 200 EMA. So now we know that, at least compared to historic movements, the Aussie yen is getting to a point where it's reaching, in comparison to this time frame, this chart, this everything, it's getting to a point of overextended movement. It's getting overbought. Now, once again, maximum movements have been 885, and we're only 475 right now. So it could still potentially, without breaking any records, it could still potentially move almost twice as far away from the 200 moving average as it currently is. So putting all of those together can give us some pretty interesting opportunities. Now we're going to come back to this one in just a moment, but let's go back to the explanation here. Hopefully that makes sense. We're going to look at a bunch of examples of how all those things work. But again, you don't necessarily need to understand 100% of how the indicator works and what it's calculating. You just need to know how to read those numbers, and they're pretty simple. We just look at average numbers and maximum numbers. And anytime we can get into a trade near maximum numbers, that's going to be better than getting into a trade with average numbers. So let's talk a little bit about that. Okay, so those are the things we look for. Here are some examples. This is the pound dollar. This is a 1 hour chart. This thing ran down and went crazy over the last couple of months. It dropped and dropped and dropped. And then we had a nice little triple bottom. It's just hit, and it hit again, and it hit yet once again. And by the time it hit, we moving average in this one. I don't have it actually listed on this chart. They're listed on all the other charts, but we were a couple hundred bars out. And remember, the average on the pound dollar 1 hour chart, you can see right there is 136, and we were like 250 bars. Also, we were at the maximum level that we had seen on the 1 hour chart from the 200 moving average. Pip wise, so we had doubled those average number of candlesticks, and we were about just a few pips shy of the maximum number of pips that we had seen in the past that the market had moved away from the 200 moving average and away from that 136 bar. So it ran, it triple bottomed right here, and then it just made a nice steady sweet move up of 180 pips back up to that 200 moving average. Remember, the market loves to just come back to the 200 moving average. It can only go so far away. Remember, the market is kind of elastic to these moving averages. It'll pull away for a while, sometimes for a long while, but it always has to snap back. Sometimes it'll snap back and cross that 200 moving average and go in the other direction. And for us, that's great. But the market just over and over again comes back to that 200 moving average, and so this was a great example in my group. We made a bunch of money on this trade. This was a great little setup, triple bottom, and ran back up to that 200 moving average. We had some missed pivots in there. There was a nice missed weekly pivot up here. It came up and hit that and just kept on going. Here's another example. Here is the dollar yen. This is dollar yen on the 4 hour chart. Made a nice double top right here. We had a whole bunch of missed pivots down here. We had a monthly pivot. We had some daily pivots. We still have missed pivots. We have quite a few missed pivots. These lines right here, this is my missed pivot indicator. And when you guys download that free indicator that I have that gives you that data in this, you will see an option to download the missed pivot indicator as well. So here we go, dollar yen, double tops, makes a nice little move. We have a 200 moving average that had not been touched in a good chunk of bars. It made a nice 250 pip move down to the 200 moving average. And the probability, I actually didn't talk about the probability. Let me talk about that for just one moment. We have a probability number right here. And this probability number tells us on the indicator. So you can see right now the Aussie yen has a probability of 89%. The other line right here says look for a trade. Yes, just a good little reminder to look for that trade. Yes, our probability 89%. Now, does that mean that if we get into the trade, it has an 89% chance of being a win ratio, or excuse me, just being a win? No, not necessarily. This means that in comparison to previous movements that we've seen, there have only been 11% of trades that have moved further away from the 200 moving average than this. 89% of past movements have gone this far away from the moving average or less. So that's a good thing to know. It's a good thing to know. And so that probability is really great. And we always want to look for trades when we're trading back to that 200 moving average. We want to find trades that have a probability of about 75% or higher. And that's going to be important as well because we're going to talk about a few trading examples there. So as we go back to this chart right here, you can see that we had an 80, this was about an 88% probability when this double topped. And our max pips, once again, on this dollar yen, the max pips were right at that maximum number. And this just tumbled down to that 200 moving average and beyond. And it made a pretty nice little dip. It continued to look like crazy. But it moved hundreds of pips down and turned around and headed back up. So again, with a lot of confidence, we can get in at this double top right here, and we know that the indicator is telling us this market is overextended enough. This has run far enough away from our point of reference that we can start looking for opportunities to trade back to that point of reference. And that is like priceless when it comes to trading breakouts, reversals, trends, any of that stuff. We never really have a point of reference. Some of us maybe look at the daily highs and daily lows and weekly highs and weekly lows, and those always seem kind of open to interpretation. But when we start looking at maximum movements that have happened in the past versus current movements, it gives us a lot of clarity, and it really can help find those entries that are going to have some of the highest probabilities. So double top, nice little probability. Everything worked out really great on that, and away we went. Let's look at another example. This right here is the pound yen. I should have that listed on here, but I don't. This is the pound yen from a couple of weeks ago. This was a trade that I loved so much. Pound yen was a wonderful little setup. This is a 1 hour chart right here. It made a nice little move down. We ended up, I'm trying to remember if this one did double bottom and then broke that trend line, or if it just broke the trend line. But this was a perfect scenario of a nice little trend line right here. We had a 200 moving average. Look at that average number on pound yen 1 hour chart. Every 129 bars, it's hitting the 200 moving average. This was currently 250 bars out. Look for a trade? Absolutely. I need a yes and I need an absolutely probably on this indicator, because this was an absolutely. So absolutely look for a trade. We were 75% at least, and look at these numbers. These are what we love right here. This is again from that average candle, that 129th bar. The pound yen on average will move 195 pips. The maximum movement that it had done previously was 772 pips further away from the 200 moving average after reaching that 129th bar that had not touched the 200 moving average. So it had moved 772 pips away in the past. Look where our current max pips were, almost 700 pips. We were just a few pips, 70 pips shy of reaching that that average, or excuse me, that maximum number of pips. So now we have candlesticks that are twice as far away from the average. We're almost at the maximum number that we've seen. And so now with a lot of confidence, with a ton of confidence, we can enter this breakout and just trade this thing up towards those missed pivots, up to that 200 moving average, and we sure did. Again, this is October 16th. This has been, I don't even know what the date is. This has been about a month or 3 or 4 weeks, right around there. And for those of you that watch the pound yen, you know the pound yen made it well up above 180. It ran up over 1,000 pips from this area before it kind of started to pull back a little bit and so on. So this turned out to be a very nice, very huge trade, and we were able to get into that with a lot of confidence because we knew that these numbers were on our side. We had missed pivots to trade towards. We had this indicator that was just screaming at us. We had little arrows right there to remind us. The 15-minute chart and the 1 hour chart had good numbers, and this thing broke that trend line and headed straight up over 1,000 pips. I didn't make 1,000 pips on it, sadly, but it did move over 1,000 pips. The pound yen, by the way, for anybody that trades the pound yen, some of you might think it's horrible and it's awful and it's the most wild pair, and I totally agree with you. And some of you might think I've made the most money on the pound yen ever, and I also agree with you on that. I had a trade on the pound yen. I was getting married. This was 5 or I guess I was getting married, so 6 years ago. I had this trade on the pound yen, and it was moving so much 6 years ago. This was all a little bit before the craziness of 2008 and so on. and I put a trade on like at 10 o'clock at night. I was staying at my in-laws' place. We were like literally flying out to get married, my wife and I, and all the family. And I was staying at their place, and I was doing some trades at night. And I put a trade on the pound yen, and I forgot to put a profit target. I put a stop loss on there, but I forgot to put a profit target, and I ended up falling asleep. And I woke up the next morning at 5 a.m. or whatever, and I was up 1,000 pips on this pound yen trade. 1,000 pips in about a 6-hour period. It was the most ridiculous thing that had ever happened to me, and it was so wonderful. And I can't believe it moved 1,000 pips in several hours. And that was a nice wedding present because I had to take several weeks off for honeymoon and all that stuff. So the pound yen paid for my wedding basically, and it was wonderful. So it's a great pair to trade. There's so much movement, so much volatility in this one that it's so great to use with this indicator. So again, that's what we're looking for is trying to find those numbers and overlap them with nice trend lines and missed pivot points. They will just pay us out time and time and time again, and it is amazing. Okay, here's another setup right here. We have the New Zealand dollar 4-hour chart right here. So here's our numbers once again. We have 103 bars on average on the 4-hour chart. This one was currently 373. Look for a trade. Yes. Probability 100%. We hadn't seen a movement this far away from the 200 moving average and this far past that average candle in as far back as we have measured. So 100%. Average number of pips beyond that 103rd candle, 169. Maximum pips, 271. Current max pips, 778. This thing ran 778 pips past that average bar. Now, you might think to yourself, okay, did we get hammered on this one? Did we lose money on this trade? Is this was this a loser? It could have been, but remember, since we're using price patterns and we're using pivot points to help kind of pull the market back up or back down, whichever direction we're trading, whenever we get into a breakout in these kinds of scenarios, in this case, we could have been looking at this trade when it was at 275, with a max pip of 271. We could say this is a great time to get in. We're already past that maximum number that we've seen. And then we get into it, and obviously it continues moving away from the 200 moving average. But the beauty about these breakouts, when you have all of these numbers, is even when the market keeps pulling away, and even when it makes new records, when we see 100% stuff, and when we see these numbers get blown out of the water, when we enter with all of the things present, which is good numbers on the indicator, missed pivot points as targets, and a nice breakout of a trend line or a double top or double bottom, 99% of the time, we're going to see enough profit that we can move our stops to break even or thereabouts, so that if it is going to continue moving away and not make it all the way back to the 200, plenty of time to lock in profit and get stopped out at break even or 1 or 2 pips or wherever we put our stop loss. So again, that's the saving grace on this kind of a situation. When those numbers are good and a breakout happens, it's going to give you enough to at least lock in some profit. And I have had many trades where I had a great price pattern, I had some great missed pivots to aim for, and the indicator was giving me excellent confirmation. I get in, it runs up, a fourth of the way to my profit target, and then it comes back and it stops me out at break even. And I've gotten into those like 3 and 4 times before it finally makes the big move. Some of these just don't want to turn around, and they just want to keep going and going and going, even when these numbers are high. And so with those situations, we enter with these parameters, with that price pattern, targeting that pivot, and with good numbers on the indicator, and it will almost always give us enough room to lock in some profit. Okay, now we have talked a good little bit about trading reversals. Obviously, this New Zealand dollar, for those of you who have been watching New Zealand dollar, this thing had been running down and down and down, and we're looking to buy it, right, as it's sliding and heading lower. We're trading a reversal. We're looking to get in on some of this exhaustion of this downtrend. And some people don't like to trade downtrends, or excuse me, reversals. Some people just aren't comfortable with reversals. You'd rather stick with the trend. And to you, I say, I completely sympathize, because trading reversals is tricky business, and you have to have a little bit of a stomach for it, kind of a thing. So can we use this indicator to trade the trend? Because this is always telling us if something is overextended, if it's overbought, or if it's oversold. And so with this indicator, we can absolutely use it to trade with the trend as well. Let me show you a couple of examples. Here's just one final one. This euro dollar has been a wild and crazy animal lately as well. Here is another example of catching some of that market exhaustion. Euro dollar, 118 bars is the average movement away from the 200 EMA. It was, at the time of this screenshot, it was 411 bars away. 411, that's a lot. Look for a trade? Yes. Probability? Biggest move we've seen yet. Average number of pips past that 118th bar, 326. Maximum number, 742. This one was currently at 911 pips. But guess what? It broke this trend line and it just started moving up, pulled back a little bit, and it ultimately made a nice little move up above 12900 and was good for a few hundred pips. Very, very nice movement. And again, we can just get in with so much confidence. We almost have to be crazy to want to buy the break of a trend line of something like the euro dollar as of late, how it's just been going down and down. It's finally looking like it's bottoming out and calming down a little bit. I still think the euro dollar is probably going to head lower, but it's been bottoming out and kind of hitting some of those levels, and now it's okay. But this was a time when the euro dollar was just pushing lower and lower and lower, and it seemed like there was no bottom in sight. So we'd have to be crazy to want to buy this euro dollar as it was just falling through the floor. And so, but with the indicator, with the numbers, with our price pattern, we had a nice little trend line right there. We had some missed pivots up above, weekly and monthly pivot, 200 moving average, and again, great numbers right here. And this thing just ran right on up and paid us out some nice pips. Okay, and one more here, pound yen. For those of you that do not like to stick to the larger time frames, I find myself on larger time frames a bit, 1 hour chart, 4 hour chart, daily chart, because I like to try to get 300, 400, 500 pips, 800 pips out of a movement. And we've had plenty of those movements, and they're super fantastic, and they're low stress, and they're high profitability, and it's just everything that we want in trading. So, excuse me, you can find plenty of smaller movements. The pound yen right here, this is a 15-minute chart. Again, we're just looking for those numbers right here. 129 bars on the 15-minute chart. This one was 220 out. Only at 56% probability, so we like to see that a little bit higher. 75 is great. And it was at 500 pips away from that 129th bar, and maximum movements were about 770. So it had a little bit more to go, and it did drop a little bit more, but then it turned around, ran up to those missed pivots, that 200 out once again, quite a few pips. We made well over 100 pips on this trade. Because it was a short-term trade and it was a short-term chart, and we took a kind of a small entry. Normally, if this were a larger time frame, we would have made 300 or 400 pips on something like this. So great little run. And again, there's just so many fantastic opportunities to trade that exhaustion, to trade that reversal, and work with those there. Okay, so just a quick little look at some of the trend stuff. So what we've been talking about, again, is trading exhaustion, trading reversals, getting in on that breakout because something has run up so far that we're ready for it to pull back and come back down just a little bit. And those are great. We have so many wonderful opportunities with that. But does that mean we have to just waste a good trend? Because the market has to pull away from the 200 moving average, sometimes a couple hundred candles before we have a nice setup. And so while it's pulling away a couple hundred candles on that nice setup, are we just going to waste those several hundred pips that are probably going to move away from the 200 moving average? Absolutely not. We can definitely trade the trend with this setup and with these indicators and so on. So the presence of the indicator tells us that markets are overextended. We're ready to trade back to that 200 moving average and back to those missed pivot points. Um, the lack of the indicator telling us, so we always have the indicator on the charts, but if it's not telling us that that the numbers aren't good enough yet, that oftentimes means that there's a very nice trend in play and that the market is still in the process of moving away from the 200 moving average, and we can get in on that. Here's a couple of examples. Here's the dollar yen. We squeezed some pretty fantastic pips out of this. I think this was good for about 400 pips, and it actually ran up almost 1,000 because of recent Bank of Japan activity. But the dollar yen was in a nice little uptrend, and it started to pull back. We talked about that double top that happened right here. The screenshot was this double top right here, the one on the dollar yen a few slides ago. It hit that double top. The indicator was incredibly overbought. It was telling us that all of these numbers on the upper left or right hand corner were just maxed out. And so the dollar yen hit, and it just started pulling back down. Hit that 200 moving average, good for several hundred pips, consolidated a little bit, and moved lower. And then it just kind of bottomed out, and that was it. And we ended up with this, again, nice little chart pattern right here. This was the inverted head and shoulders pattern on the 4-hour chart that got us interested. This right here was a nice little neckline. So again, we're focused on the indicator. We're focused on missed pivot points and price patterns. And this was a nice little inverted head and shoulders pattern. So the dollar yen was in a nice uptrend. It still is in a nice uptrend. It was in a nice uptrend. This was our price pattern. We had missed pivots up here, and the indicator wasn't telling us anything. The market had just hit the 200 moving average, and it had just hit on a bunch of different time frames. So it was just consolidating around that 200 moving average. Where did my mouse go? I think it's coming back. So it was consolidated right there, and then it just made a nice, fantastic break of that 200 moving average, or excuse me, of that trend line trading away from the 200 moving average. The indicator was telling us nothing, and it ran up to those missed pivots and was great for a good chunk of pips. So this was an excellent opportunity to trade in the direction of the trend because the indicator was telling us nothing. Now, what the indicator will, another thing that it'll be very, very good for is that as it makes these price pattern breakouts and makes these runs in the direction of the trend, we can essentially stay in that for as long as the indicator does not start giving us signals in the other direction. So this dollar yen, for example, we could stay in this thing until it finally started to show us once again overbought signals. And so we trade from 0 to overbought, and then we start looking for those reversals once it reaches that overbought to trade it back to the 200 moving average. I think there is a possibility. Is the audio coming through okay still? I think it looks like my computer might have frozen. Let me see. No, actually it's not. Okay, something was just frozen up there. All right, I think we're good. I think we're good. So maybe we're not good. This is something's freezing up a little bit here. So that was a nice little fantastic opportunity to trade with the trend. Another great example is, sorry guys, I think I'm having a little bit of something seems to be weird. I'm hearing a beeping sound. Haven't had that before. Let's see. Okay, I was doing it earlier with the presenter. Okay, yeah, when I move my mouse, it sounds like it's beeping. That's kind of strange. Okay, no problem. No problem. I wonder if I stop showing my screen for just 1 second, if that will fix it. Or if that will, doesn't look like my screen's working. My mouse is working. Okay, sorry guys, let me pause this for just 2 seconds. Right, it looks like wow, super weird. Okay, so So maybe if one of you guys maybe on that end can move the mouse and maybe stop the screen sharing, that would be good. It's totally frozen up on my end now. Okay, there we go. Sorry about this, guys. Okay, it looks like the screen has stopped. Hmm. All right. Okay, let me see if I can restart this real quick here. Looks like it stopped showing my screen, but there's a weird beeping every time I move my mouse, and it's not really letting me move here. Okay, let me do that real quick. Sorry for the delay here. I'll be back in just 2 seconds.
Hey folks, it's Raleigh here. Jared's obviously having some technical issues here, and hopefully we'll have those resolved shortly. He's been right in the middle of a fantastic presentation. He was winding down, and I want to make sure that he gets to finish up and address questions that you might have. So I expect to have him back here shortly. And we'll just keep you posted. Maybe in the meantime, why don't you just take a short break here, or stretch your legs, maybe grab something to eat or drink. We're coming to the close of today's trade-a-thon with Jarrett wrapping up, and then we have Cam White bringing up and batting hit a cleanup, if you will. And so we still have some great material that we want to present. But it's kind of interesting. We've had 3 or maybe even 4 presentations today where we've had some shaky technical experience here. We'll have to look into that. But I hope everybody is doing well. I hope that you've enjoyed the session today, and I hope that we've helped create an environment where there's several new ideas that you can take away with you as you continue to refine and look for improved consistency in your trading. That's what we're here to do, and I know that I certainly have. I've got a long list of things that I want to take a look at, and I'll be exploring over the holidays on some ideas that I think I might want to be adding to my trading, and some new markets and some concepts to trade. So that's what it's all about. I don't think we can ever have quite enough education, in particular when it comes to trading. Okay, Jarrett says he's back. He thinks. Jarrett, can you hear me?
Yes, there we go. Can you hear me okay?
There, I hear your voice. Yes.
That was a strange little occurrence there, but I think it's all fixed. So sorry for the delay in the breakout for a moment. And let me just bring my charts back up here. Okay. All right. Here we go. Let's try this again. All right. Is that working okay for everyone? Okay, very good. Okay, so just to kind of wrap all of this up into a nice little bow on the high probability breakout trading. Um, Again, this indicator is a saving grace. It's nothing that we can't do manually, but it saves us a lot of time and gives us a lot of very important historical data on the charts and on every pair that we're trading. So great opportunities to trade with the trend until the indicator tells us that things are overextended, and a great opportunity to trade reversals against the trend because markets are exhausted and overrun. Another great example of a nice little setup. This was a wonderful indicator setup as well. Gold has been sliding and coming down for some time, and we were able to make some pretty fantastic money on this. This is only just 2 or 3 weeks ago. We had a nice little price pattern, good head and shoulders on this. The indicator was just kind of at zero on everything. We just hit the 200 moving average down here, broke that neckline on our head and shoulders pattern, and this thing ran down very, very nicely. We were able to make some pretty fantastic money on that. So again, a great tool to trade with the trend, great tool to trade away or against the trend. But it gives us so much comfort and confidence when we get into these breakouts. We know now that the market is either getting overextended, it's not overextended yet, it's in the process of getting there. You know, we have a nice point of reference when we put this kind of triple approach together of targeting these targeting these missed pivot points, trading towards 200 moving averages when those setups are there, and looking at the numbers from that indicator. And you know, again, a lot of great examples of that right there. Here's a little freebie to just kind of keep an eye on for those of you that might be trading some of these pairs. Looks like my charts kind of reset on me when my computer froze up. Here is a great little setup that I'm watching right here, right now, in conjunction with this indicator. Now, let me just put this out there. And that is that yen pairs of all of them seem to be able to trend the most. And so I tend to try to trade in the direction of the trend with yen pairs more than trading reversals. But again, sometimes those numbers get really good and we just have to trade that reversal. I'm keeping an eye on this right now. You can see the 1 hour chart. We have a nice little red arrow there telling us that there's a setup for a downward movement. Average number of candles on the 1 hour chart is 134. We're currently 378. 89% probability as far as candles moving away from the 200 moving average. But look at these numbers right here. Maximum pips, 885. Currently, we're 474, so we're kind of at the halfway mark. So if we take this trade, if we get into this price pattern, trading back towards the 200 moving average, targeting if we go to a slightly larger time frame here, you can see that there's a bunch of missed pivot points down here, daily, weekly, monthly pivot points. So there's lots of great targets for this to move down to. But if we take this entry, we know that it's a little riskier than it potentially could be if we had some higher numbers here. So for example, if that were 6 or 7 or 800, we could have a lot more confidence in getting into that trade, almost to the point where we could get in a trade and just hang on to it until it hits our profit target. So that's one thing to look at right there. Currently, pound yen has a pretty excellent setup. You can see right here this 1 hour chart. There we go once again, 373 bars away of 129 average. It went 991 pips away from that 129th bar. And we had a nice little trade, a nice little move there. It ran up that nice rising wedge. It broke and it made a run down here. You can see it on that 1 hour chart. Nice little entry. Made a run, and it's just kind of hopping around. It's almost hit that 200 moving average, so it almost made a 100 pip profit target there. It's pulled back a little bit, and in my opinion, could potentially continue to drop a little bit more. But again, we have great pivot points to target, great price patterns, and then that indicator just gives us so much good stuff. And there's really quite a few of these examples. A lot of them happen to be on yen pairs as well. So here's the euro yen. For anybody, oddly enough, my trend lines got moved when my when my computer froze up. So here's a nice rising wedge once again for anybody that's trading the euro yen. Again, you got to be careful on yen pairs. They're a little tricky to trade away from the, or excuse me, against the trend. But when we have these kinds of numbers, 373 bars of 121, 96% probability. Currently, it's run 757 pips past that average bar. Previous movements have only gone 546, so we're beyond those numbers. So it's time to start looking for this 4 hour chart, this whole breakout to trade back down towards these missed pivots in the 200 moving average. Okay, so there's many examples. There's lots to talk about. One thing that I do have is I've got a trading group. And in this trading group, we look at these kinds of setups on a very super regular basis, like every single day. And you can stop by and you can get a free trial to our trading group at daytradersfx.com/about. Sadly, my website is under a little bit of construction and it should be done in a day or so. So there's a few kinks there, but everything works. It's just not so easy on the eyes for another day or two while we finish up that are happening there. I would love to, in the just few minutes that we have left, take some questions here. I see we have a couple of questions. Will the indicator work on any broker trading platform? It'll work with any broker. Currently, it's set to work with MetaTrader. I've got my programmer working to get it set up for TradeStation, NinjaTrader, and a few others, but that will be a couple of probably a few weeks to get that all done. So it's currently working on MetaTrader 4 only. But for those of you that are Forex traders, MetaTrader 4 is a pretty common platform. Another thing that you can do is you can go to pretty much any broker and download a demo account. If you trade Forex through a different broker, Thinkorswim or through TradeStation or anything like that, you can download a free MetaTrader demo account. You can put the indicator on there, and you can just kind of use that as some charting to use with the indicator for the meantime. So that is a great one to keep an eye on. And again, we have some free trials and so on. You can kind of put that all to work. Chris could not download the indicator. Okay, so one thing to just say about the indicator here, when you put in all of the info and you get you get to the point where you can click on the link, just download and save. And if there's any problem with anybody getting into that, I will email it out. So everyone that downloads the indicator, I'll make sure to email anyone a different copy if you have any trouble downloading that version that we have there. So I'll send out an email. And with my trade group, for those that download the indicator, I will send you a special offer for downloading that indicator, and that will be coming in the next 24 hours. So just keep an eye on your email, and again, download that indicator because it's fantastic and amazing. It'll come with a special offer, and you'll get a chance to see it in live action and really see how it can very positively affect your breakout trading. So again, there's the link. There it all is right there, and it's right there at that link. And again, you on this right here, you can contact me any one of these three ways. If you have any problems with anything, you can send me a message on Twitter. You can go to my website and contact me there. Or you can simply send me an email at jared@daytradersfx.com. Is there any more questions? Did I miss anything? I hope I didn't. I think I got most of the questions. And I want to say super thank you for sitting and listening to me today. Hopefully it wasn't too painful, and hopefully you have learned a couple of things that you can apply to your breakout trading. I really hope you have. I love working with traders, and I love sharing the things that I've learned along the way. So again, thanks for having me, and very, very nice to be with you all this fine evening.